In this video, I want to share with you exactly how to know when resistance like this is going to break so that you ride massive trend all the way to the upside, and also how to know when support is about to break to ride massive trend all the way to the downside. Either you want to buy for an uptrend or you want to sell for a downtrend. This concept is very important for you to know how this works in real time, and I want to show you multiple examples on price action and how you can do it in your future trading and decision making. Watch the video all the way to the very end. This is a very powerful concept. The first thing I want us to take a look at here is if the market is in an uptrend. Okay, let's look at this concept together. Market is moving upward. It makes this upward move impulsive. It retraces back down, move upward, impulsive, and then retrace back all the way to the downside, move again to this very point, exact same point, come back down, but did not come back into the area where it retraced into, move upward again, come back down, and then move up into this very area. One thing that is very profound here is that we see that the market is moving upward, but at this very point, we see a pause in the market moving all the way to the upside. That's one thing, which means we can call this very area an important point where market hit resistance. But I can tell you that this market still have capability of moving upward if we see a breakout. Why? Because if you look at when the market is moving upward, we have this very higher low, we have this higher low here, we have this higher low here, we have this higher low here, but the market was not creating higher highs. That means market have high capability of breaking out right here. For sure, there is a resistance, that is sell pressure, hindering the market from breaking on this very area of resistance right here. However, if we see a breakout right at this very point, it means that the market have greater capacity of moving all the way to the upside for the fact that it has been creating all these higher lows, moving all the way to the upside. That means if we see a breakout here, there is 70 to 80% chance the market is going to break and begin to move all the way to the upside. This concept is very, very important for you to know when a resistance level is about to break and move all the way to the upside. I'm going to show you practically in multiple examples on price action. The same thing happened when the market is coming all the way to the downside. Let's say you were in a sell position or you want to enter a sell position and the market move downward, impulsive move, and then retrace back upward, impulsive move, and afterward you begin to see market move upward. Then we market move into this very area, come back up, move into this very area as well, move back upward, and then come into this very area. As you can see, it's the same thing with what we see in when market is moving upward, okay, for an uptrend. In this case, a downward trend means that the market have capability of breaking this very level of important support. Why? Because market have been moving all the way downward. Markets here, we have this very lower high, we have this very lower high right here, we have this very lower high right here, but market was not creating lower low, which means market have greater capacity of breaking right on this level of support. Even though we've been seeing this very support holding from here, this very area, and this very area, which means there are buyers seated around this very point and willing to move the market upward. But for the fact that it was not creating new highs right here, it means that the market have capability of breaking on this very level of important level of support. And that is what is very important in this very concept, so that you better know when a support or resistance is going to break. Most likely 70 to 80% of the time when you see this kind of setup on your price action, it means that market have high likelihood of breaking downward for a downtrend or breaking upward for an uptrend for market to ride all the way to the upside. One thing very important here is when you see this kind of pattern, there is this kind of target you need to figure out. What I do is once I see this last impulse come into the market and the market begin to range into this very area, then my target is going to be the measure of my last impulse. What does that mean? Let's say, for example, in this case of sell opportunity, market breakout here, where will my target be? It's going to be from this very last impulse to the downside. That means I have to measure from here to this very point right here, okay? And I will measure the same way to the downside. That means if we see a breakout here, market is going to come back down this much. So my target is going to be around this very area on price action. The same thing happens when you're looking for a buy opportunity all the way to the upside. So the last impulse for this is this very impulse right here that created a new high. So you measure from here to this very point, and once you see a breakout here with a bullish candle, then your target is going to be from this very point to this very area. This is how you know your exact profit target point. So your target is going to be at this very area, while your stop loss obviously is going to be below this very point of important support. This is what is important, while your entry is going to be around this very area. With this methodology, you can get 1 to 2 and 1 to 3 risk reward ratio for sure, and this is very important. Now the last example I want to give right here is if you are in a ranging market. Very important, so pay attention. So if you are in a ranging market, let's say market is ranging in this formation between two horizontal boundaries of support and resistance, it will come to a time when the market will begin to move in this formation. Instead of market hitting this very area of support, market will begin to be in this kind of formation like this. It means market is about to break out on the resistance level. Very important. So for you that understand this concept, you already know that market is going to break out right here on resistance. Why? Because if you look at the nature of this price action, we can agree that market have been ranging between these two boundary, support and resistance, but at some point we begin to see the market begin to make a move towards the resistance level, creating more resistant touches right at this very point, and afterward we see a breakout. If we see a breakout here, is a clear indication that the market is going to break upward and begin to make massive move all the way to the upside. The same thing happen if we see the market begin to make significant move towards the support level. That means if the market come back down here and begin to make this kind of move on the support level, then it means that the market have greater capacity as well of breaking on this level of important support right at this very point. And in any case, your target is going to be a measure of this very range from here to this very area, and then you bring this to this very point to get your buy target at this very area. If you see the market breakout on the resistance right here, this will be your target right here, and this is going to play out 70 to 80% of the time. I'm not saying it's a holy grail in the market. There is no holy grail in the market, but it will help you identify a valid tradable breakout on resistance and support, and this is very important. Now let's take a look at some examples on price action that have occurred before, both for resistance and support, that is buy and sell opportunity, to look at how this concept will work on practical price action so that you can apply on your chart. The first example here is this very area. You notice that this market was coming back down and there is a break of structure at this very point. So we see a break of structure right at this very area. So market break structure, market come back down, have this very move upward, come back down, create a new low, but market move up, then come back down again, move up again, and break structure at this very point. So we can consider that this market is already in an uptrend with this very parameter. So from here, we can say market move like this, move downward, move up again, move downward, move up again, and then afterward, we see the market come back down, did not come to this very point, and then move up, come back down, move upward, come back down, move up into this very area, and then come back down again. One thing is very important here is that this very point of important resistance is where the market have been hitting at this very point. So market have been hitting this very point of resistance right here. So we have the first resistance right here, we have the second resistance right here, we have the third resistance right here, and the fourth resistance right here. What do you think is going to happen in the market if we see a breakout? Market is definitely going to move upward. Why? Because if you look at the way market is moving from this very point upward, market is creating higher lows. We have this low here, we have this low here, we have this low here, it's moving upward, we have this low here, we have this low here, and market is going to see breakout. So market breakout at this very point. So after the breakout, what happened? Market begin to move all the way to the upside. So like I said earlier, your first target is going to be your last impulse that market created a new high. So from this very point, this very area is your first target, and this is going to give you a nice risk reward ratio. From this very point, after the breakout, market should move all the way to the upside, and your first target is going to be this very area. First target, you can have second target and third target, while your stop loss is going to be below this very point. So this is very important. In this way, you can identify resistance level that if it breaks, is going to move in that very direction, or support, if it breaks, is going to move all the way to the downside. This is a very important concept that if you apply right now on your price action, is going to change your trading game or move your trading game all the way to the next level. Another example occur right here. Market was moving upward from here. We see market move upward, retracement. We see market move upward. We see little retracement here. Market begin to move within this very area, and then afterward we see a breakout right at this very point. So if you look at it critically, you discover that this is a very nice resistance level at this very point. However, if you look at the way market was moving upward, you discover that the market have been moving with sequential new higher lows all the way upward. So a breakout here is going to make the market to move all the way to the upside. Not only that, we have this first move here before with this little consolidation before this move into this very area. So we can see that the market moved from here into this very area, and this exact point is going to be our take profit target, which is very important. So market move all the way upward. After this breakout, market should hit this very target right here. If you look at what the market did, it actually hit this target right here before coming back to the downside. So when you see this kind of formation on your price action, just know that if market breaks out right here, there is a high tendency, 70 to 80% of the time, for market to hit your target if you follow this methodology. Of course, in this very case, your stop loss is going to be below your support level right here after the breakout, and this can give you a 1:2 or 1:3 risk reward ratio. This is very important. If you apply it, this will work very well 80% of the time if you apply this concept accordingly. If you look at this very price action on USDJPY 4-hour chart, it is covered that the market was coming all the way to the downside. Market move, we have this very retracement, market move back down, we have this move, market move into the same area, market move upward, move into the same area, and a breakout. So if a breakout happened right here on this level of important level of support, then that means market should move aggressively all the way to the downside. And we can see that market touched this area the first time here, we have the second time here, and the third time here, which is a spike all the way upward. So from here, a breakout here is going to make the market come back all the way to the downside. So what we need to do is to prepare for the breakout, and our last impulse was from this very point right here. This our last impulse from here all the way into this very area, and that's the exact same target we want to take when looking for especially our first profit target into that very area. So from here, I am expecting that if the market breaks out, then my target is going to be at this very point right here. This is where my target should be. So let's look at how the market play out in real time. If you look at it, market actually broke out here. So we have a breakout at this very point. That means our entry is within this very area, and then our stop loss is at this very point, and our take profit target is at this very area. Very important. And if you look at how price action goes, market actually hit our target right at this very point. We have this target right here before the market now bounce off into this very area to retest this level. This will occur sometime and then begin to come back down again. So this is a very important concept, guys, that once you identify this kind of pattern where market have been hitting this very level of support, in this case for a sell position, and then market have been making lower highs in this very formation, then that means there is a high tendency that market is going to break out here. And if market do break out, then 70-80% of the time, market is going to move all the way to the downside. Prepare for a sell opportunity all the way to the downside. Your target is the length of your last impulse all the way downward for a sell position. This is very important. In this way, you avoid, number one, false breakout. Number two is going to make your target very, very realistic and simple, so that you don't keep an unrealistic target for yourself. And the third thing is the tendency of breaking out is very, very high. If you follow this principle and apply it strictly with price action the way I have explained, you're going to see that you will scale up your trading game all the way to the next level. If you gain something from this very video, consider supporting this channel by leaving a like for this video, subscribe if you haven't already, and turn on the bell notification for more Forex videos like this one. Also, check the channel for other Forex content. Join our Telegram channel, link in the description of this very video, and also the pinned comment for more Forex updates and trading signal. Join right now. It is a free channel. And if you want to watch my other videos on the channel, check this video out. It's going to help you greatly. And also check this video out as well. It's going to help you too. Thanks for watching, and I will see you in the next video.